In China, the official PMIs published on January 31st and the most recent mobility indicators show that domestic demand is rebounding faster than expected following the end of the zero-COVID policy and the reopening of the country. This trend is expected to strengthen further in the coming months, assuming the epidemic curve continues to improve. We now expect Chinese growth to be slightly over 5% in 2023, up from 3% last year. The rebound in activity will be driven by private consumption and the services sector, which will benefit from catch-up effects and from the improvement in local confidence after 3 years of health restrictions. In addition, thanks to support policy measures, the property sector should be able to stabilize during the year. However, the end of the crisis will be complicated, especially because a large number of property developers continue to face financial difficulties and default risk remain high. The post-COVID rebound in Chinese growth will have positive effects on other economies in Asia. Firstly, because the reopening of Chinese borders will have significant effects on tourism in Asia. Hong Kong, Vietnam, Thailand, but also Malaysia and Singapore should be the key beneficiaries because of the large size of the tourism sector in their economies and because of their reliance on Chinese tourists. Moreover, if the situation of the property sector improves, then the demand and the price of energy and metal commodities should be boosted. Commodity exporters such as Indonesia should benefit from this situation. At the same time, however, if there is a new increase in global commodity prices, this should cause new inflationary pressure and this could delay the end of monetary policy tightening in Asia. Lastly, the rebound in Chinese growth should have very limited effects on trade of manufactured goods in Asia. Chinese demand for manufactured goods is mostly for its export sector and much less for the domestic market. Therefore, it depends largely on the final demand originating from advanced countries. But this final demand is weakening rapidly and the world electronic cycle is turning down. Actually, exports of industrialized countries in Asia already registered a significant decline in the last 2 months of 2022, and these dynamics are expected to continue in the short term. All in all, the growth rebound in Chinese growth will bring a welcome support to activity in the region, especially in the services sectors. However, only Hong Kong and Thailand, together with China, will register a stronger growth in 2023 than in 2022. On average, economic growth in emerging Asia, excluding China and excluding India, will slow down this year, reaching 3.6%, down from 4.5% in 2022. Domestic demand in Asia will suffer from the reduction in post-COVID catch-up effects and from tighter financial conditions, and most importantly, exports of goods will suffer from the slowdown in global demand.